Hello, and welcome to another episode of our Stock Pick series. In today's series, we will talk about the AI industry. Do you think that AI stocks are a bubble now, or there is still a huge potential for growth? Let me share with you my thoughts here. And I will offer you a special bonus treat today if you stay till the end of this video. Hello everyone, welcome back to STA Club, the club for stock trading and analysis. This channel is dedicated to providing you with high quality tutorials, guides and insights that demystify the world of trading. Join us as we will share more trading secrets and valuable insights. To stay updated and be the first to access these valuable resources, hit that subscribe button now. By subscribing, you're opening the door to the world of trading and maximizing your potential for success. Before we dive in, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. Many of you might have heard or read about the fanfare in early 2023 when ChatGPT announced its official pilot launch, when Microsoft invested $10 billion into the company. Even Google's CEO, Sundar Pichai, went into high alert. The news also made every tech giant in Silicon Valley start to focus on riding on the AI wave. So, what is AI? AI stands for Artificial Intelligence, which is a set of technologies that allow computers to perform tasks that usually require human intelligence. And what can AI do? AI can mimic human cognitive functions such as seeing, understanding and responding to language, analyze large amounts of data to find patterns and solve complex problems. AI can learn from experience and improve performance to solve complex problems. AI can also make recommendations and decisions. This makes AI the next generation of computing and could replace the way we shop, connect with one another, and perform tasks. This means that AI will become a big part of our future lives, as we are already currently very reliant on our mobile phones. So, is there a bubble? Many of you watching this video will ask, is AI just overhyped by the media? Let's just find out. Any company embarking on the AI journey now and becomes successful in their niche could potentially monopolize its market as consumers become more reliant on technology. The current AI bubble draws comparisons to the dot-com crash of 2000, but this parallel overlooks significant differences. Tech valuations have indeed skyrocketed, especially AI stocks. Yet, the market dynamics show a fundamentally different pattern from previous cycles. AI companies deliver tangible business value today, unlike the speculative nature of the dot-com era. Microsoft's ChatGPT integration and Google's AI-powered search innovations demonstrate how leading tech companies generate substantial revenue through practical applications. The evidence suggests that many AI stocks might be underpriced when considering their long-term potential. We will delve into the AI stock fundamentals, market penetration rates, historical tech valuations, and global competitive landscape. This comprehensive review aims to determine whether we face an AI bubble or witness the start of a tech revolution that could reshape our future. AI companies' financial performance show growth patterns that challenge traditional valuation metrics. Let's look at the basic indicators that suggest AI stocks might be undervalued. We do this by looking at some key financial metrics for AI companies. AI companies' financial health show remarkable strength in several areas. Firstly, we look at the revenue growth rate. We note that AI startups are reaching revenue milestones 5 times faster than previous SaaS companies. Companies are also achieving over $1 million in annualized revenue within just 11 months of their first sales. From this chart, we can see that more than 56% of AI company revenues come from international markets so far, and we will continue to see this reach grow. Over 30% of AI implementing companies also report much time savings, indicating the huge cost benefits from using AI. A fundamental change is happening in how quickly AI companies generate revenue compared to their predecessors. AI startups scale to $40 million in revenue in just 20 months, and dramatically outpace traditional software companies. This makes funding demand to fund AI startup companies increase significantly in 2024. This accelerated growth isn't just market hype and has real business adoption and implementation to back it up. Let's look at how AI can benefit profit margins and scalability factors. Interesting patterns emerge as we scrutinize profit margins. Tesla, for example, here demonstrates how AI capabilities affect margins. Tesla's gross profit per vehicle declined by 60% over 3 years. This shows the complex relationship between AI implementation and profitability. The short-term margin pressure often masks the long-term expandable benefits. AI solution scalability advantage stands out. AI-powered systems can handle increased workloads without proportional cost increases. This scalability factor is significant to long-term valuations because it helps companies process larger datasets efficiently, automate more complex tasks, and maintain consistent performance during growth phases. Let's now analyze AI market penetration so far. AI technologies have achieved unprecedented market penetration rates that reshape our view of tech valuations. Recent data reveals that 65% of organizations now use generative AI regularly, almost twice as many compared to 10 years ago. Enterprise adoption metrics show remarkable progress in all sectors as adoption rates in AI grow. 72% of organizations have adopted AI in some form. Half of companies use AI in 2 or more business functions. 88% of these financial service companies reported revenue increases from AI adoption. Marketing and sales lead in AI implementation, showing the highest adoption growth. Here in this chart, we see that healthcare has emerged as a front runner in implementation patterns. The industry will become the fastest growing market segment. Projections show that 90% of hospitals will use AI for early diagnosis by 2025. Most organizations complete their AI integration within just 3 to 6 months. The banking sector has also begun to gain substantial momentum, especially in risk assessment and compliance applications. What about the market size projections through 2024? Market projections reveal extraordinary growth trajectories. The global AI market was valued at $515 billion in 2023 and should reach $757 billion by 2025. North America leads with a 41.23% market share. The Asia Pacific region has emerged as the fastest growing market with a projected compound annual growth rate of 19.8%. The generative AI market alone should reach $1.3 trillion in the coming decade. This suggests current AI stock valuations might be conservative given the massive market potential. The AI market analysis reveals fascinating parallels and significant differences with previous tech booms. Let's now look at historical data to help us understand our current position. The dot-com era shows striking similarities that are fundamentally different from today. AI mentions in earnings reports have surged by 70% since late 2022. This reminds us of the dot-com naming trend in the late 1990s. Today's tech champions demonstrate stronger financial foundations. The S&P 500 top 5 companies make up 27% of the index, which exceeds the 18% concentration during the internet bubble. The valuation matrix highlight important differences. The tech sector currently trades at 31 times forward earnings versus 48 times in 2000. Bullish sentiment is now at 44.5% compared to the 75% in 2000. Therefore, all market sentiments today look more sound as compared to the 2000 dot-com bubble. Risk-adjusted returns point to a more matured market dynamic. The technology sector has generated 32% of global equity returns and 40% of US equity market returns since 2010. Market speculation doesn't drive these numbers. The global tech sector's earnings per share have grown about 400% from its pre-financial crisis peak, while other sectors collectively just grew 25%. This cycle stands apart because today's tech sector's leaders run capital-intensive operations, unlike the low-capex software companies of the late 1990s. These AI companies make heavy reinvestments in AI infrastructure, which suggests a more sustainable growth path. Let's look at the global AI competition landscape. The global AI landscape has turned into a high-stakes technological arms race. Nations now compete for dominance in what might be our era's most revolutionary technology. This competition alters the AI industry and stock valuations fundamentally. Countries have adopted new approaches to AI development. North America now leads the global AI market with a 41.23% share, while new players are emerging faster than ever. The competition extends beyond market share to strategic sovereignty. The current landscape now reveals that the Middle East nations have implemented strategic AI investments. China is also growing its dominance in AI research. The European Union pushes for AI leadership by focusing larger investments in this area. Japan has also renewed its focus on semiconductor manufacturing. Critical trends also emerge from cross-border transfer of technology. Companies can use diverse data sources and grow their customer base through effective cross-border AI transfer management. Yet, significant challenges remain. Companies must deal with complex regulatory hurdles in cross-border AI data transfers. Different jurisdictions' data protection laws need careful consideration. These complications matter for AI stock valuations because they affect a company's global growth potential. Cybersecurity has become crucial. Experts predict cybercrime costs will reach US dollars $14.3 trillion by 2025, up from US $4.1 trillion in 2014. This growing threat has pushed companies to boost their AI-powered defense systems. In conclusion, AI market metrics and ground applications set it apart from previous tech bubbles. Our analysis shows AI companies achieve revenue milestones 5 times faster than their predecessors. Enterprise adoption rates have doubled within a year despite seemingly high valuations. Market indicators suggest steady growth instead of speculative inflation. AI projected growth to US $757 billion by 2025 looks promising. Strong profit margins and high enterprise adoption rates hint that current valuations might undervalue AI's future potential. Nations and corporations compete fiercely to gain AI advantages in the global arena. Today, AI leaders show robust financial foundations. Tech sector PE ratios remain nowhere near the 2000 peak, unlike the dot-com era's speculation. This evidence suggests a groundbreaking technology rather than an overvalued bubble. We have barely scratched the surface of AI's true worth. Astute investors should look deeper than basic comparisons to understand the key differences that define this new tech era. Since you have already spent so much time watching till this part of our video, we shall give you a bonus treat and share our potential AI stocks to look at. Here are the 2 most promising AI potential stocks we like. The first is Microsoft. Why Microsoft? They have a vast array of software applications that makes it a key beneficiary of the growing digital transition phase, and this coupled with its close relationship with OpenAI will put Microsoft in a strong position to capitalize on the rising demand for generative AI. The second is Google. Google is already exposed to most segments of the generative AI market, including training, inference, and digital ads. Google's AI Gemini is already being used across most of the company's product offerings, and because of Google's dominant foothold in search, we believe that Google can further capitalize on AI to generate more revenue through ads, cloud, and other services, thus improving their top-line growth and operating margins. These companies, to me, are considered to have huge growth potential with its AI capabilities in the AI field. Therefore, a smart investor will be able to spot such opportunities and enter should any of these stocks correct from its peak. Hope you guys enjoyed this video and see you in my next video. Goodbye!